Lou, why the stock market is so jialat now? It's all like coming down, up, down, 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 down. Mr. Lou, can you tell me what's going to happen, what's happening, and the kind of thing? Well, ladies and gentlemen, there is a lot of developments in the stock market. I think it's important for me to describe to you where I see things are right now. There's some easing of some fears, but there is a lot of dark clouds that are looming in the horizon. I think it's important for me to describe where some of these possible threats are, and more importantly, what I'm going to do in reaction to them. Let's watch on, shall we? The title of today's talk is The Japan Crisis is Now Over, but unfortunately, stormy days are still ahead. So let's watch on to know why I think the Japan crisis is over and why the stormy days are still ahead. As usual, these are my normal disclaimers, and let's go. So the Japan crisis is over for now, but unfortunately, the market is still very choppy. The S&P 500 yesterday went down by almost a percent point, and so did the Nasdaq. That is not as bad as the earlier days when it went down by 3% or so. And that's a reaction to something that's happened, and I'll describe to you what has happened. The slight drop in the indices is largely in reaction to a weak demand to the 10-year Treasury auction, okay, and that gets people very scared because many people realize that the demand for the US Treasury is not so hot anymore. So they get things a bit nervous, and the investors continue some sell-off. And as a result, the market initially was actually doing quite well. In fact, it is a plus 1% gain. I think was about 1.5 or more. And then suddenly, at the end of the day, it just collapsed. So this is in reaction to the very bad result of the 10-year Treasury auction. Now, on a good note, the Japan market is now coming down. The Nikkei and the topics went down by 10%, hit the circuit breaker, and the next day it went up by 10%, and now it's more or less stabilized, and that's a good outcome. People asking me, Mr. Loo, why is the Japanese market now at a better position? Well, it's actually quite funny. You need to know what did they do, what happened in the history, and what caused them to do what they did. The deputy governor of Bank of Japan came out and made an announcement that they will not increase interest rate when markets are unstable. I quote him, right? As we're seeing sharp volatility in domestic and overseas financial market, it is necessary to maintain current levels of monetary easing for the time being. So he said, the business leaders, we won't increase interest rate when financial markets are unstable. Now, that's a dramatic U-turn from what they say they're going to do, which is to increase interest rate, right? Why did he do so? You got to look at the history of Bank of Japan, at the mistakes they have made, and now at least they are learning from their mistakes. So what the deputy governor said has caused a rebound in the Nikkei index, right? So after he made the speech, the Nikkei index just jumped up, right? Eased the market. And the US dollar to Japanese yen strengthened again. So the yen weakened again. And that's good because a lot of people are doing the funny yen carry trade. So the crisis in the carry trade is over. If you watch my earlier video, which I encourage everyone to watch so you understand what is the problem of the carry trade. When the interest rate was low in Japan, many people borrowed the yen and invested in US asset, be US Treasury, where they get a high interest rate, or they buy US asset like equities, where they get a good growth. Well, two things happen. Number one, when the Bank of Japan indicated they're going to increase interest rate, the yen start to strengthen. The returns are a lot less in yen terms. And the second thing is that US stock market actually went down significantly. All this caused this panic to happen and caused the US stock market and the Japanese stock market and global stock market to crash. Well, with the easing interest rate policy right now just been announced, the disparity between the US and the Japan interest rate is now maintained, okay, maintained in the short term. So that's okay right now. That's okay. As long as you keep this low interest rate in Japan versus the US, it is okay. And the good news is that most of this thing called the global carry trade, sibei chim, right? But this carry trade, that means people involved this kind of trade, is more or less removed. The impact on the stock market is going to be a lot less. JP Morgan said that 3/4 of the people who dabbled with this carry trade right now has unwound the position. So this is now okay. Now, this is now okay. The last 1/4, I think, will take the time and slowly wind down. So this fear for this thing right now has come more or less to an end. Well, some people say, hey, why did the alligators backtrack all this decision? Well, you need to understand the history. In 1980s to 1990s, the Bank of Japan, okay, made a huge mistake in this area, caused a 30-year recession. 30-year recession. Japan in the 1990s, 1980s were booming, right? Real estate markets were booming, equities were booming, everything was rising really very well. And then the Bank of Japan put a sudden brake to the money supply and caused the entire bubble to burst. The asset bubbles rose significantly. The property prices rose, the equity prices rose significantly. And the Bank of Japan in the late 1980s did a sudden, and a significant money supply breaks, cut, and increased the interest rate significantly and caused the whole bubble to burst suddenly. That sudden burst directionally was the right policy, but they caused it too sudden at a time when the economy cannot take such a big shock. They actually increased the interest rate from 2.5% to 6% over 16 months in order to control the escalating asset bubble. Well, you know what happened after that? The whole economy of Japan actually went into recession for 30 years. 30 years. So this time around, when they smell that this thing could happen again, the Bank of Japan, deputy governor quickly make a dramatic U-turn and said, okay, we're not going to cause this thing happen. Well, 好不容易, right? Just managed to recover and get out of the 30-year recession. They're not going to go back again, right? So they make a dramatic U-turn, and that basically ease off the whole carry trade risk. So if that's the case, right, the alligators realize that, that this is not the way to go, and they have eased off this tremendous risk. Then why are there still stormy days ahead, Mr. Loo? This crisis is over, what? What stormy days ahead? Well, let's watch on. There are two risks that are happening. One of them I will highlight as a bigger risk than the other, where most of the media seems to be having the reverse. I think the bigger risk is a risk of the Israel-Iranian war that's going to happen. The backdrop to this is that it's alleged that Israel has assassinated the Hamas leader in Iran and killed him. So this has irritated the hell out of the Iranian government. And the Iranian government, the Ayatollah, has actually stepped out and just say that Limpe is going to fight Israel and they must pay for this. So it actually escalated the risk. Right now, Israel is already fighting Gaza. And of course, Gaza is terribly level and things like that. They also provoke Hezbollah, and right now missiles are being exchanged on both sides. And right now, Iran is being drawn in as well. So Israel is at threat of a three-front war. Hezbollah and Gaza being dragged in a war, not a big deal, okay? But when Iran get dragged in the war, that's a very major war, okay? A few days ago, Blinken, the Secretary of State of US, have warned G7 that a war could break out in the Middle East and Iran and Hezbollah could attack Israel soon. Fortunately, they haven't yet, but doesn't mean that they won't. They haven't attacked yet, but it doesn't mean that they won't. In the recent days, Iran and its Lebanese ally Hezbollah keep coming out with statements that they will respond to the assassination of the Hamas political leader. And, they keep giving threats after threats after threats. And that's not a good thing. The last time something similar happened was in 1967, called the Six-Day War. At that point in time, the president of Egypt actually came out and made a lot of threats that they're going to wipe out Israel. He actually got a lot of allies in Middle East to surround Israel. So they have got Syria, they got Jordan, they got Egypt, all surrounding them. I remember many other countries were involved as well. And they keep giving threats after threats after threats. And they line up a lot of troops around Israel. Guess what? Israel did a preemptive strike, okay? And in 6 days, wipe out the entire Middle East enemies. And this is likely to happen again if the Hezbollah and the Iranians continue to give threats like that. So it's my analysis that if the threat escalates, there's a good chance that Israel could repeat what they are used to because they are so small, they cannot afford to be in reaction to a threat they cannot handle. So most likely they will launch a preemptive strike again. And this time around, when they launch a preemptive strike, the enemy is going to be ready as well because they know that they could be preemptively struck upon. This will spark off a huge Middle East war, and that's going to be bad for the whole economy of the world, and that's going to be bad for the whole stock market as well. Well, if a war breaks out in the Middle East, there's a chance of an oil shock. And oil shocks are never good. Iran is one of the major oil producers in the world. And if we look back in the past, in 1973, the Yom Kippur War that broke out between Arab and Egypt and many Middle East countries, that caused an oil shock where the oil prices gone up. And if the same thing were to happen again, because if the same thing were to happen again, just like what we see in 1973, then this will cause an inflation, and this has resulted in tremendous slowdown in growth globally and caused a spike in inflation. And the same thing that we saw in 2022 will happen again and again and again, and that's very, very painful for the stock market. The current situation may not be an exact repeat of the past. Someone said that history does not repeat exactly, but history rhymes with the past. So there's a good chance that what we are seeing right now is going to repeat some form and bits and pieces of what's going to happen. And anything of that happening is not good for the stock market and economy. The second fear that is now spooking more of the stock market is that there's an increasing US recession fear. And the stock market right now has plunged largely because of it. So there are increasing talks of recession. If you ask many of your friends who are in business or who are employees, a lot of them will tell you that they have actually frozen hiring. There's ByteDance and Facebook and some of these big tech companies, they have started retrenching people as well. So it's not something that is unfounded. There's an increasing fear of recession. That's largely because the slowdown economy is engineered by the high interest rate, and there's lag effects, and right now is probably coming through as well. So the Federal Reserve needs to react quickly, but unfortunately may not be reacting fast enough, because even if they cut interest rate, there's also a lag effect as well. Right now, there is a combination of all these things that cause fear in the stock market. Well, for now, I won't overreact, because I know that the stock market, despite all the volatility and ups and downs, and most likely more downs in the near future, is bound to recover, even though it may take a long time, 6 months, 1 year, 2 years. Usually it will eventually recover and continue its path of compounding. But I think it's important for me to highlight to everybody that the path ahead is going to be a bumpy one. But I wouldn't overreact. I wouldn't sell, but I need to know psychologically that the path ahead is bumpy so that I won't overreact. So right now, I'm just keeping a peek of an eye on this thing, and I'm going to get myself busy over all the other things I need to do in my life. So with this, I hope that you could give some comments. Remember, click like and subscribe to my channel. I'll keep you updated almost on a daily basis of what's happening, especially in turbulent times like this, that you want to be kept informed. Okay? With this, thank you, and I'll see you in a day or two. Bye-bye.